Hi, in this video I'd like to go over two short trades. Now on this day volume was high. The market had made two failed attempts at the overnight high and now we're moving down from that second attempt. The Dow and the Nasdaq were pretty much doing their own thing on this day, but at this point it looks like they and the ES are all starting to move together and move down. Now as we'll see, I took a couple of shorts here. And the obvious question might be, why didn't you just short the market and hold the trade? And that's a fair question. In this case, this is the third day in a row with good volume after a period of really low volume, low volatility days. So I'm not quite ready to take the position that we're in a long-term high volatility period. Now also, the way I trade, I'm either looking for the opposite end of a small range, or to take 5 to 6 points out of a trend, and that's kind of my comfort zone. Now I also feel that's a sweet spot for the market I trade and the way I trade it. Now the ES commonly swings 10 to 15 points in either direction, and so on the days it swings 50 points I tend to miss quite a fair amount of that move, and I've got no problem with that whatsoever. And I'm always a little wary of people that claim to be, getting 5-point trades on one day and 50-point trades the next, because it's really, to me, a different style of trading. So I basically stick with what I do and try and get bits out of the market, chunks out of the market. Don't really worry too much about trying to capture the whole range. Now also, as you'll see, there's only so much volatility against me on a pullback that I'll tolerate. So what we'll do, go into the first trade, and what we can see here is we've got some decent downside momentum, and we can see that on the current trades that we have good size on the sell side but not really much on the buy side. And we're also coming to the last swing low, and what happens when we get there, we trade 1466 contracts into the bid before we start pulling back, and we can see that on the depth in sales here and we can also see it on the auction vista with the large trade circle. Now if we look just above us, we can see an area of consolidation around 67, 75, 68. So as we move up, I put in an offer there because I think we should hold that position. Now at this point, it's not the greatest trade location, but this is a high volume day, and by the look of it, it looks like it's going to break down. So what I'm doing, I've seen a little bit of a hold with the 1466 contracts. I'm seeing it pull back, not really seeing a lot of strength on the pullback, but not trying to get the perfect price, because what I don't want to do is miss the breakdown. Yeah, so I'm not too worried about finessing myself perfectly into the market. So we can see after the entry, the market pulls back 3 ticks, not many contracts traded in that pullback, and then we start to see some aggressive sellers come in. So if you look at the recon tape, at the size of the sellers, we can see some size coming on the sell side, and we just need to break down now through the place that large circle appeared, because that's a node of volume, an area with a bunch of positions in it, and then when that breaks we should get a decent push down. Now remember, this is a high volume day, but the depth itself isn't that high. Somewhere between 500 and 1,000 contracts on most levels. So when I do put in the stop, I'm putting it quite far from the market. But of course, if I see overwhelming order flow against me, I will get out. But this is just one of those cases where you're expecting a good run down. You've got the volume, you just really need to try and take advantage of it. And to do that, you've got to be prepared to let the market move against you a little bit. Okay, we traded down to just above my first target, and then we moved back up to 68.25. Now still, at this point the order flow is neutral, and if you just take a look at the cumulative delta, you can see it's been flat throughout the move up. So to me, this is a trade that's still worth the risk. Now if we look above, we can see there's a low volume area at 68.75, and as long as we can stay below that, then I'm not going to be nervous. Moving on a few minutes, let's just watch the breakdown. As we move through 66.25, we can see a rush of orders, which is people getting stopped out, and that helps us push down. but it also helps us in terms of some traders on the long side losing money and confidence, and traders on the short side feeling good about their trade. So what about the end of the trade? Well, I got filled on a target at 62.50 and the market moved to 60.50. I've now got 2 contracts left and I'm trailing down behind the move. Now, I would have no problem moving this stop order out of the way if I felt the move up was weak, but we are moving up from an area of high volume, and for the first time on the way down we are starting to see decent moves up in the Dow, the Nasdaq and the cumulative delta. We can also see that at 24,000 contracts this is the highest volume pullback so far in the move down, not to mention the highest number of ticks in a pullback. Now in hindsight I would have been better off staying in the trade and even adding more contracts, but I've got my rules and I follow them, and I try not to worry about what could have happened if I'd somehow managed to change my rules for that one trade. Okay, on to the second trade. Now we can see that we had some significant pullbacks here and here. In fact, the market really moved sideways and had trouble getting below the overnight low here and here. We've broken that now and we have a nice cluster of volume below us. So I'm looking for a weak pullback, and we can see that in the delta, as the market moved up, the delta is just flat. So for me, this is the perfect pullback trade. Now I need to go short and give some room for me to get through that cluster of high volume below. So I don't want to go short too close to that cluster of high volume. Now you can see as we move up, I clear the current trades above us, and on the second attempt up there we can't make any more headway to the upside. There's still no real delta to the upside, and so I take a short. And this is one of the cases where weak order flow is the entry signal. It's a lack of upside momentum rather than seeing one side hold the market. And in a few of the webinars we've talked about what you can't see is often as important as what you can see. And in this case, you're not seeing the momentum to the upside. You're seeing a lack of willing to trade above a certain price. What I'm going to do is just let this video run for a while, but first, before we do that, just watch this area here where we had this volume trade and what happens as we move through it. Obviously people don't get stopped out the moment we go tick through a price. They've got a bit of leeway, but just watch. We'll see a burst of trades. Boom, and that's it. That's what people stopping out looks like. You get that burst of trades as you get through an area of high volume, and that's effectively what helps you push down, but also it kind of helps to put a ceiling on the price. So when you see that stop out price, you really shouldn't see yourself move up too far up past this area here. That should be kind of a line in the sand now. So what I'm going to do is just let the video run so you can watch the trade play out. Up to you how long you watch it for. Really what I wanted to do was kind of show the typical pullback trade where the market just pulls up and just that weakness. So really what's most important on this video is just the way the market pulled back up and we just stopped trading. And that's one of the key signals in order flow to look for. You know, everybody's looking for iceberg orders, everybody's looking for absorption, but really the most obvious signal sometimes is just lack of willing. So like I say, I'm going to leave the video running. You can watch the rest of the trade. There's no more commentary, and good luck with your trading.